welcome to our first keynote session. Now, the secret word for this session is token. So token, and you'll have an opportunity to enter that in the Brella platform at the end of our keynote speech. What a pleasure today to have Alex Tapscott here as our keynote speaker. Now, Alex, you actually changed my world. So I read your 2016 book, Blockchain Revolution: How Technology Behind Bitcoin is Changing Money, Business, and the World. And after I read this, you inspired me to completely change my research direction to focus exclusively on blockchains. So Alex co-authored this with Don Tapscott, and 2016 was just the beginning. They launched the Blockchain Research Institute, which is a global phenomenon. In fact, last month, you just had a big explosion of growth in Europe. And I really encourage the audience to go to alextapscott.com. There's so much content there. One of my favorite things on your webpage, Alex, is I love your TED Talk. Blockchain is eating Wall Street. It's had 700,000 views. Now, Alex most recently has published Financial Services Revolution: How Blockchain is Transforming Money, Markets, and Banking. And today he's going to talk to us about the new age of finance. So Alex, thank you for being here.
Thank you, Mary. It's my pleasure.
Okay, I'm going to turn the stage over to you, and when you're ready for questions from our audience, and I encourage people to start typing your questions into the Brella platform. When you're ready, just call me back.
Sounds great. So I wanted to just one plug for you, since you did such a great job plugging my book. This is a book that you wrote, which has this lovely inscription, personalized inscription. I'm so glad to hear that the book had such a big impact on your research and on the coursework at the University of Arkansas. This is a very exciting topic, and I'm glad that it's resonating with you and your students. So I'm going to share a deck, and the idea here is that I will walk through this for about 25 to 30 minutes, and then from there we can go into the Q&A. So just give me a moment to go to the slideshow view. Great, okay, wonderful. So this is a very interesting time, obviously, in human history. This global pandemic that we're all experiencing has accelerated the course of human events and accelerated the course of human history. And that's something that occurs in every single crisis. Laws that usually take years to pass are passed in a matter of weeks or months. Big trends like e-commerce, which have been slowly and steadily growing over time, all of a sudden leapfrog 5 to 10 years into the future. We're forced to confront big changes in how we do business, the way we work, and the way we learn. Education, for example, has moved online with mixed impacts, I think, some positive and some negative. And it's, I think, fair to say that we're entering into this new age, that the pandemic sort of acted as a punctuation point for the last age. And I think the new age is going to be characterized by the rise of a number of new kinds of technologies. And it's very much the beginning of a second digital age. The first digital age, of course, was enabled by the microprocessor, the personal computer, the internet, and so forth. And now we're in this period where technology is ubiquitous. It's part of our daily lives. It's part of the way we work, and it's part of the way we do business. And there are many new technologies that people talk about as part of this second digital age. But there's one in particular that I think is going to do more than any other to transform our world in some positive ways and perhaps some negative ways, which I'm happy to discuss. And that technology, of course, is the technology behind cryptocurrencies, and it's called blockchain. It's my firm belief that blockchain represents nothing short of the second era of the internet. And it's going to do more for the world than the first era of the internet did. Let me explain what I mean by that. When you use the internet today to send and move and share information, you're not actually sending an original, unique thing. You're sending a copy or a version, excuse me, and you're retaining an original. Now, for most kinds of information, that's actually a huge benefit. It's kind of like we all have our own printing press for information. So If I send an email to one person, I can send it to someone else. If I write a blog post, it's available for all to read. If I put something into Twitter, if I tweet something or I post something on Instagram or Facebook, it can spread very quickly and be seen by all my friends. So having a printing press for information is kind of a good thing. Except when it comes to things that have value, assets specifically, things like money or stocks or bonds or titles or deeds or votes, being able to copy any of those things is a very big problem, obviously. Because if you can copy money, the money becomes worthless. If you can sell the same share of Apple over and over and over again, then that asset becomes worthless. And of course, if you can vote over and over again, it undermines the validity and value of the outcome of an election. So it's great to have a printing press for information. It's not so great to have a printing press for assets. And this is a very specific computer science problem that people have been trying to figure out for some time. How do we create digital scarcity? How do we create trust online? And because it's such a difficult problem to solve, we've relied on intermediaries, middlemen, to stand in the center of our economic lives online as well as offline and perform some essential tasks. They establish identity, they create trust, they handle the business logic, the movement and flow of assets and value in our economy. And overall, they do an okay job. But they have some very specific limitations. They're centralized, which means they're vulnerable to hacking or to attack. They add cost and friction to transactions. They exclude big parts of the population who don't have access to financial services. And they capture data about people, which is problematic because it means we can't use that data to organize our affairs, we can't monetize it, and of course it could be used to undermine our privacy. So what if the internet were entering a second era, from an internet of information to an internet of value? What if we had a way for people, businesses, other entities to transact, to move value, to create value online without the need for trusted third parties? And this insight kind of came to me originally when I first learned about Bitcoin in 2012, I think 2013. This is before the word blockchain entered the vernacular. There was no blockchain industry per se. There was this one cryptocurrency that was enabled by blockchain. And what Bitcoin did was pretty revolutionary. It gave us a way to move value peer-to-peer without an intermediary. And what's so interesting about Bitcoin is that it worked. And it worked so well that it's set off this spark, which is kind of caught on like wildfire and captured people's imagination. So with that little kernel of insight, this idea that, well, Bitcoin, if you can move Bitcoin online and people can trust that when they own it, it's the only version of its kind, could that same basic principle apply to other kinds of assets? And if so, what would that mean for different industries? What would it mean for government? What would it mean for supply chains and manufacturing? And what would it mean, of course, and I think most importantly, for the financial services industry? And so together with my father, Don Tapscott, we wrote this book, Blockchain Revolution, which, you know, better lucky than smart, they say. It came out in 2016, right, as people beyond the small clique of those interested originally in this idea were starting to latch on to this concept, people in finance and in government and so forth. And it ended up selling over 500,000 copies, and it's been translated into 19 languages and continues to do you know, quite well and have a great impact. One area, and this is what I'd like to focus my remarks on today, is that the financial services industry, I think, is the one most ripe for change as a result of blockchain. If you're familiar with this basic diagram, this is called a Rube Goldberg machine. A Rube Goldberg machine is a vast and complicated apparatus, and in the end, it does a very simple thing, like it cracks an egg or closes a door. This is basically the way our financial services industry kind of works today, right? And I'll kind of explain what I mean by that. So if you go to the store and you tap your card on the card reader, you might think that the money in your account is going instantly to the merchant. Of course, it's not. It is going through a sequence of intermediaries, and in the end, it's taking days for that transaction to settle, and it's costing the merchant big fees. If you think about the securities industry, I'm sorry, I have to just pause this for 1 second. Hi, sorry about that. It's one of the perks of doing these things from home. You never know what's going to pop up. So it turns out that much of the technology that underpins the financial services industry is older than I am, and it's certainly older than the students who are listening to this presentation. And that's sort of a funny thing, because the internet has transformed so many industries, publishing, media, how we search for information, how we communicate with each other. But it actually hasn't had as big an impact on the financial services industry, and that is going to change. The industry itself is kind of more than just any one single industry. It is the lifeblood of global commerce. It's the way in which we coordinate money, value, assets across geographies, across marketplaces. And its leaders, back in the old days, they used to be known as the masters of the universe. Now, they're not really known as that anymore, probably because people in the tech industry are the real masters of the universe today. But if you look at the industry and you sort of peel back all these layers, it basically does 9 things. And I'm going to sort of talk through a few of those during this presentation. The first thing it does is give individuals in a market a way to identify who they are, where they are, etc. In financial services, this is known as KYC or AML, know your customer, and anti-money laundering. It's important that participants in a market have verifiable identities. The second thing they do is it gives a way to store value. Now, for individuals, that can mean in a high interest savings account. For a corporation, it could mean storing excess cash in so-called risk-free assets like T-bills. But this is an incredibly important thing, because otherwise money would just be stuffed in the mattress. The third thing it does is give us a way to move value. The global payment system is critical to the functioning of our economy, everything from retail payments to vast transfers of wealth between corporations, governments, and so forth. The fourth thing they do is give us a way to lend value and to access credit, of course. Everything from buying a car or buying a house to financing the acquisition of a company for tens or perhaps hundreds of billions of dollars. The fifth thing that it does is give us a way to access capital, risk capital, to fund a new business. So in the world today, it's VC, venture capital, IPOs, and so forth. The sixth thing is exchanging value, a way to transact in different financial markets, from stocks and bonds to derivatives and so forth. The seventh thing is insuring value. This would be a way to insure against catastrophic risk. 8, analyzing value. Data mining is very important to the industry, of course. And 9 is accounting. Now, accounting is not exactly the sexiest topic, but it's sort of foundational to all of this, because it gives us a way to organize information across different periods of time, and across different geographies, and across different functions within an organization, in a way that allows us to actually understand what's happening inside of a company. And people say that accounting is the foundation of modern commerce, and I tend to agree. So we're not going to talk about all of these. I'd like to talk about a few of my favorites. Let's talk about identity first. So there's this new cliche that says data is the new oil. And you know, it's cute, but I think it's sort of inaccurate. I don't think data is the new oil. I think of data as sort of the new industrial plant and equipment. So throughout history, various assets have been foundational to the economy at that point in time. So during feudal times, land was the most important asset class. During industrial times, it wasn't oil per se, the fortunes were made in oil. It was actually in industrial plant and equipment, the ability and capacity to build stuff. And today, it is data. Data is the most important asset in the world. Now, what's problematic about the way the world works today is that we all create this data, but we don't get to monetize it. It's sort of, in a way, a version of data feudalism, in a sense, digital feudalism, in that we provide all of this data to large corporations, and in the end, we only get to capture a small amount of the value. So what blockchain enables is for individuals to enter into transactions in a way that is more private and more anonymous, and that's a good thing, because it means you don't have to disclose everything about yourself every time you want to buy something or move money between parties. But it also, quite interestingly, gives us a way to actually capture more value. So if you own and control your identity, you can decide how much information a counterparty gets to see. And you can decide whether or not you want to get compensated for that. So in a way, this is making data less of a feudal model and more of a citizen-centric model. And that is incredibly important. In terms of financial inclusion, the upshot of all of this is that if individuals can attest to who they are through more innovative means, perhaps they don't need the old attestations like, a birth certificate, for example, to get access to financial services. And for the people who are listening, if you're familiar with the DeFi space, decentralized finance, that's an example of how people can do that, which we'll discuss in a bit more detail. Moving value. So the value of stablecoins has increased from about $500 million 3 years ago to $20 billion as of last week. This is one of the fastest growing marketplaces in the world, period. And what's interesting about it is that it started with startups like Tether and Gemini and Circle and others, but it's now becoming much more commonplace and obviously much more interesting to big corporations. Everyone, I'm sure, is familiar with LIBRA, which is a very interesting and potentially problematic project by the Facebook Corporation that wants to basically, having sort of captured the information side of your life, wants to capture the value side of your life and be an essential party to all of your transactions online. Now, Facebook has received a lot of backlash from this. Understandably, I think we should scrutinize large companies that are trying to do, big and bold things. But what's interesting about the backlash is that the backlash isn't against blockchain or stablecoins in and of themselves. The backlash is actually against Facebook being the company that's doing this, because Facebook has a checkered history as it relates to protecting user information and doing the right thing. So whether or not Facebook launches Libra, and I think it's still a big if. I mean, this has been going on for over a year, and they still haven't actually gone live with this project. I think that it's only a matter of time before others ultimately step up to the plate, because I don't think that Jeff Bezos, for example, is going to want to have Libra bucks trading on the Amazon marketplace or being used to buy goods and services. I think ego alone will spur innovation in that regard. So going to number 5, funding and investing. So the traditional way that companies get funded is that you start off with an idea, and then you go out and you do an angel round. So you go to friends and family, people in your network, or some professional investors maybe, and you try to raise a little bit of money. From there, you go to the seed stage, and if you're successful, you might then get funding from venture capital firms at the Series A stage, Series B, C, so on, and so forth. And if you're successful, then you get to go public. Now, you get to go public by IPO, or SPAC, or direct listing, or whatever. There's a few different ways that companies can go public. And this is a model that, has worked pretty well. And it's a model that American capitalism has pioneered. And it's led to the creation of some amazing companies. But it's also a system that's sort of antiquated in some respects. Now, many of you may remember the so-called ICO boom that happened in 2017 and 2018. Of course, there's still new token sales going on today. They're just happening under a different name. And I think that that was one of the big problems with the ICO boom, was that it was a bit of a misnomer. ICO implies that companies are issuing coins like money, when really they're not. They're issuing something more akin to equity into a new venture. And I think that if you peel back sort of the over exuberance of the ICO boom, the underlying kernel was quite incredible, which is that if you're an entrepreneur, regardless of where you are in the world, you can issue a token which represents a claim on what you're doing, could be a piece of equity or something else, to a global marketplace of investors. And those investors need not be big professional investors. Some of them could be, but some of them can be smaller. And you can raise the money you need to start your business. So it doesn't matter if you're in Little Rock or in Toronto or in Silicon Valley or in Pakistan or Nigeria or something like that. You have the same access to capital as others do. And that's really important because today, at least, or historically, people have always said, well, you got to be in the valley in order to raise the right VC money from the right people. I think that's not true. And I also think that the coronavirus, which has decentralized a lot of organizations as work from home becomes more popular, is demonstrating that companies can function across geographies. So we should be able to fund them across geographies as well. Number 6, exchanging value. So Mary said that the magic word for this talk was token, which that's pretty cool. Anyway, tokens are an incredibly interesting innovation. So I think people look at the industry today and they see that there are thousands of so-called cryptocurrencies, and they might wonder, quite correctly, why do we need all these different kinds of money? Surely one version of money or a few versions of money is probably enough. In the world today, we have lots of different nation states which create and issue their own money, and it's not really a system that works that well. And the important thing here is that most tokens are not designed to be money in the sense that they're designed to be, a store of value, a unit of account, a way to buy goods and services, because a lot of them don't function like that. Instead, they have sort of different kinds of purposes. Cryptocurrencies, things like Bitcoin, platform tokens, things like Ethereum, utility tokens. A lot of these new DeFi projects have tokens that allow you to earn interest if staked to a new network. Security tokens, these would be tokens that represent equities, bonds, derivatives, other kinds of traditional financial assets. Natural asset tokens, tokens that represent claims on things like carbon or land or water or air. Crypto collectibles, NFTs, so-called non-fungible tokens, basically digital art, digital collectibles, and so forth. And of course, stable coins as well. Each of those different areas could be its own 45-minute discussion. We could go into great detail about how, say, the securities market for stocks, for example, is undergoing a big transformation. If you'd like to learn more about that, I would encourage you to check out Financial Services Revolution, the book Mary mentioned at the very beginning. The final one is accounting. So accounting is an invention that's about 500 years old, and it was invented by a mathematician in Italy named Luca Pacioli. And he had this really interesting insight, which is that the merchants at the time in Florence were recording transactions chronologically in a ledger. So every time there was a purchase or sale, they would just put a line item into a ledger. And they would have a notebook like this, probably leather bound and 10 times as large, that they'd have to pour through to find information. What Pacioli figured out was that you could actually organize this information into a table. And for every transaction, you would record as a credit and as a debit. And in the end, these things would balance. And this invention was called a balance sheet. And the balance sheet and the modern accounting practices that followed from that are sort of foundational to the world as we know it, and allowed for us to organize information and money in complex ways. So it was a great invention, but it's also 500 years old. So how could we improve upon Pacioli's insight? Well, as everyone here knows, if you're a student of the course, for every transaction that happens in a crypto asset, there is an entry into a blockchain, a distributed ledger. And so what that means is that if I'm a company that's interacting with that world, I can record my own debit and credit on my own balance sheet. But I know that there's a third entry, which is recorded on the blockchain. And so what that means is that effectively we go from this double entry bookkeeping to triple entry bookkeeping. And triple entry bookkeeping can allow us to search, audit, and verify financial information instantaneously, as opposed to doing it with the cycles of the moon every month or doing it every single quarter. So that's an amazing insight, and I'd be happy to discuss more. So I'm just looking at the clock. I'm going to wrap this up in a few minutes so we have time for Q&A. But I wanted to address something that's sort of top of mind today in this industry, and that's this idea of decentralized finance. So it might be helpful just to sort of break this down and understand what is DeFi and how does it differ from the way the world works today. So the way the world works today is that we have large, heavily regulated, centralized intermediaries and entities that effectively govern the way financial markets operate. Big banks, global firms, governments and central banks, and large organizations like the SWIFT network, which handles international payment transactions. On the far end of things, we have the world of decentralized finance. Now, people think of DeFi as some sort of new invention. Well, Bitcoin sort of is the original DeFi. In fact, I think it's probably the most authentically decentralized version of finance that there is. But there are lots of others like MakerDAO, Wi-Fi, Cosmos, which has its own sort of subset of projects that are in this space. Where is the innovation going to happen? It's certainly happening in the DeFi space, but I think in terms of what it means for the world, a lot of it is going to happen sort of somewhere in the middle. So if you were, if you're listening and you were like, let's say the CEO of a bank, I would say that you want to focus on the areas in the center. You know, the world is changing in some interesting ways. We're about to sort of see the biggest cohort of people, millennials and Gen Z, finally start to accumulate assets, money. They interact with financial markets in a fundamentally different way. They're going to want access to different services and products. They're going to want a different experience from financial intermediaries. And that means those companies having to figure out how to do digital asset custody, how to create and, or at least enable customers to use stablecoins, to give them a digital wallet, which allows them to hold traditional securities, cash, and also crypto. A way to use the technology to sort of reinvent their own audit function. They should be looking at how to tokenize securities or to work with companies that want to go public in unconventional means. And they should be looking at, new kinds of applications and new kinds of exchange functions to compete with this new emerging class of companies like Binance, Abra, etc. Payments is a very good example of where the world today is highly, highly centralized. SWIFT sits in the center of all of this. And I think it's possible to imagine a world where instead of everything having to run through SWIFT, these different entities can connect with each other. And in so doing, transactions being reported to a ledger that they can all trust and be accurate means we don't have this big centralized point of failure, which I will remind you was developed in the 1970s. It's like the oldest instant messaging system in the world, SWIFT, excuse me. So what could the payment system look like? Well, micropayments, peer-to-peer payments, real-time tracking and auditing, anonymous payments, embedded payments, sort of things that self-execute because you have smart contracts or autonomous agents that are your counterparty or your partner. No major point of failure, so no centralized problem with everything kind of running through the center of things, and a single version of the truth. And instant settlement, of course, is something that's kind of important. So when you send money using SWIFT, the message from you to your counterparty happens instantaneously. But the actual clearing and settling of that transaction can take days or weeks. So I want to end on just one final point here, which is that we've been talking about changes to the financial industry. But I think that the area where potentially the biggest shift of all is going to occur is in money, money itself. So money is one of humanity's most enduring inventions. It's taken various forms over the years, from cowrie shells to precious metals to bank notes to bank balances on spreadsheets in central banks and commercial banks. And we get used to the status quo. The status quo for money has been around for 50 years, which means that basically everyone on this call doesn't remember a time when, the US dollar was pegged to gold. Nobody really remembers that. I certainly don't. I wasn't around. But every sort of 50 to 100 years, there's a big shift in how money works. And I think we're on the brink of that, which is that money is going digital. And with it, we're seeing the rise of three new kinds of currencies. Self-organizing currencies like Bitcoin, corporate money issued by banks and big corporations like Facebook, and then central bank digital currencies, which is, to me, one of the more interesting areas to explore. So the Chinese central bank, the People's Bank of China, has been working on developing a Chinese digital currency. It's called DCEP for years, and they've deployed it across a number of major regions and cities in China and are looking to export it around the world. This is sort of an interesting concept because today the US dollar is the global reserve currency. The US is 20% of the global GDP, but something like 60 to 70% of transactions globally are still settled in US dollars. Most emerging market debt is issued in US dollars. So if you're Argentina, people are not looking for debt denominated in pesos. They want to know that they're going to get dollars back. And that creates a destabilizing effect in the world. And other countries like China and Russia would like to see their own currency rise to prominence. There are geopolitical reasons why I think that's problematic. And some smart people are saying, basically, well, instead of there being a single country that gets to decide or gets to impose its will on which version of money should be used globally, maybe we should think about a more collaborative approach. Mark Carney, the former governor of the Bank of England and a Canadian like myself, has advocated that we look at a form of decentralized money, basically a basket of other digital currencies that would function as a single global currency. Others are proposing that the U.S. take initiative here. Chris Giancarlo, who's the former chair of the CFTC, has said that we should be digitizing the U.S. dollar and is leading an initiative called the Digital Dollar Project. So that's 9 things. 9 things for one industry amongst dozens that I think are going to be impacted by blockchain. At the BRI, we're investigating all of these different areas. Blockchain's potential is something that we've spent a lot of time focusing on research, and actual deployment is the thing that big companies and governments and other institutions want to do. And so what we do is we try to bridge the gap. We provide the insights and the materials and the services that they need to do that. We've got a great set of books coming out. Mary mentioned Financial Services Revolution. Supply Chain Revolution was just launched, and our next 2 are in the queue coming out in the next few months. And then another thing that I think would be helpful for everyone, in addition, as a complement to the courses that you're already taking through the University of Arkansas, if you're a student, would be to check out our course online. This is a collaboration with INSEAD, the business school, and it is the most popular course on blockchain on the Coursera platform. We have about 1,000 people sign up every single week for this course. It's not a computer science course. It's about blockchain applications and use cases in business. So I think it would be very helpful for the audience. So I'd like to sort of end with a parable, if I could. And it kind of goes something like this. So, the inventor of chess, the legend is ascribed to India, to China, sometimes to Spain. But basically, the king of the land is so pleased with the invention of chess that he offers the creator anything he wants as a reward, whatever his heart desires. And the inventor of chess says, "Oh, sire, I'm a humble man of humble means and humble wants, and all I really need is some rice to feed my family. But I want you to give it to me in this way: 1 grain on the first piece of the chessboard, 2 grains on the second piece of the chessboard, 4 grains on the third, 8 grains on the fourth, and so on and so forth." And the king, who I gather, doesn't really do the math on this one, says, "Sure, how much rice could that possibly be? A bag of rice, maybe a barrel of rice, a humble request indeed," and says, "Your wish is granted." Of course, when he starts to get ready to prepare the rice, he looks at the chessboard, and 2 becomes 4, becomes 8, becomes 16, 32, 64, 128, 256, 512, and so on and so forth. So that by halfway through the chessboard, it's more rice than the entire kingdom can produce in a year. And by the end of the chessboard, it's enough rice to cover the whole planet in 6 feet of rice. Now, there's an addendum to the story, which is that the king gets very irritated with the inventor and chops his head off. Let me assure you that that's not going to happen to you folks if you embrace this idea of exponential growth. And I think actually, if anything, 2020 has been a lesson in exponential growth, because we've seen how case counts of COVID have grown from 1 to 2 to 4 to 8, and then all of a sudden it's 50,000 a day across the country. So exponential change is something that can occur in any area, and it has occurred in technology. I would say that the first digital age represents the first half of that chessboard. The world today, as we know it, is completely unrecognizable from what it was, in the 1950s or 1960s. Just imagine what the next half of the chessboard is going to look like. It's going to be one that moves quickly. Now, the great thing is that I'm speaking to a lot of young people, a lot of students here. And when it comes to this new age, leadership is not necessarily going to come from above. It's not necessarily going to be led by the CEOs of big companies or by the heads of government. It's something that is everyone's personal opportunity. And that means that you, as much as anyone else, can have an impact and change the world. So I'd like to say thank you very much to the University of Arkansas for having me. This has been a really wonderful experience. I look forward to the questions, and I just hope we have enough time to get through some. So thank you very much.
Alex, thank you. You delivered. That was fantastic. I really appreciate it. First, we're going to start off with a comment. So I'm got multiple social media platforms I'm monitoring here. Yep. So I do have one student who just wants you to know accounting is sexy. I'm suspecting that's from one of our accounting students.
Yeah, I'm sure it is.
Okay. We have a question from one of our blockchain honor students, Lily Hong. I love this question, Lily. She says, Alex, what do you think is the most effective strategy to convince more financial institutions to consider blockchain technologies?
It's a great question. So in the early days, I should say, a few years ago, when big financial firms were starting to wake up to the potential of blockchain, the focus was always on saving money. It was, we are using all this old technology. It's vast, it's complex, and we ourselves rely on third parties, vendors, and middlemen to do business, whether it's in payments or in securities markets or what have you. We were going to look at blockchain as a way to reduce the cost of doing business, and that's fine. It's always good to sort of look at the cost side of things. But if you only focus on how a technology is going to change the way you do business today, you're going to miss out on the way it could change your industry in the future. So what I always tell executives in the industry that I speak to is don't focus only on the cost side of things. If anything, put that aside. Focus on the revenue opportunities. What ways can blockchain allow you to access new customers, new markets, and to create new products and services? Because it's possible that all those old industries you think you're going to save money cutting costs from could eventually disappear. But it could ultimately open up new frontiers for you to create value in other ways. And if during my prepared remarks, I had that slide where I showed sort of the way centralized finance works in DeFi, and in the middle, there's sort of a half a dozen new industries, new business lines that financial services firms could focus on, where they're not just looking to protect the little fiefdom that they've already built, but where they can actually expand their capability and create more value. So, and I think that's probably true for, frankly, everyone, which is, what are the revenue opportunities? Don't focus on costs.
I think that's such a great message, because we know a lot of our large financial institutions, because of this pandemic, are starting to announce huge layoffs. And so they're in cost-cutting mode.
Yeah.
But, they can't lose their eye on their long-term survivability, which will depend on revenue generating opportunities. So thank you for your comment. This may be a specific question, so if you're not comfortable answering it, that's fine. What lessons can we learn from Estcoin? So Estonia, tried to launch their own digital cryptocurrency, and I think the European Union wasn't too excited about it. Do you have any commentary on that?
Well, I would say that it was a noble effort, and I would say that governments should be doing things that are innovative. They should be pushing the envelope. Estonia is a unique case of countries in the world. I'm not sure if the students know the history, but Estonia used to be part of the USSR. It was a satellite state in the communist, hegemon. And in 1991, when the USSR collapsed, Estonia was made its own country, but it had none of the legacy bureaucracy or institutions or anything that that most other countries have, like the States or Canada or whatever. And so at the time, they made this interesting decision. They said, well, there's all these new tools, there's computing and so forth. Why don't we start by being digital first? And that was quite a pioneering thing in the 90s. So Estonia has a higher level of satisfaction among citizens with government services. It has a higher level of penetration for digital government services with its citizens. And it's not by no means the wealthiest country in the world. Its GDP per capita is about the same as Portugal, and a third as much as the US. But if doing business in Estonia and accessing government services in Estonia is far, far easier than it is doing it in the United States or Canada, where I am, for example. So it only made sense that they would try and launch their own sort of digital currency. It's a tough sell if you're part of a gigantic international organization like the European Union, which has its own currency and by mandate has a monopoly on that currency. So I think that probably it was too early and maybe a bit too small. But what we are seeing is the European Union, the People's Bank of China, even the Federal Reserve in the United States realize that there's a huge opportunity with central bank digital currencies. And it might just be helpful to sort of explain what those benefits are. So for starters, if cash is disappearing, which people say it is because of the pandemic, people are afraid of money being a transmitter of the virus. And this is part of a trend that's been going on for 30 years, then we need a new way for people to transact in an anonymous or semi-anonymous way. And there are lots of valid reasons that you may want to transact in a semi-anonymous way. Maybe you want to donate to a political party, but you're worried that your abusive husband is going to find out about it, right? Or something like that. Or you want to buy birth control pills, or your parents are super religious. So, there's plenty of reasons why you may want valid reasons why an individual should have sovereignty over their own payments. And using, companies like Visa, MasterCard are very convenient, but they have limitations in that regard. The second thing is that, you could provide greater access to basic banking. According to the OECD, there are 37 million Americans who are either unbanked or underbanked. But most of those people have a phone or cell phone or, smartphone or something like that. So you could offer, a digital bank account directly with the Federal Reserve rather than going through commercial banks that may have higher requirements. And then the final thing is that during a crisis, like the one we just had, you could basically institute helicopter money very easily. The Federal Reserve has been monetizing the US debt for the past 10 years, basically buying bonds in the open market and putting it on the Federal Reserve balance sheet and printing money in order to do that. Printing it digitally is what Jerome Powell, the chairman of the Federal Reserve, said. So rather than using a tool like monetizing the debt, they could actually just hand over the money to individuals to go spend it in the real economy. And we know from the first fiscal stimulus package that that's an extremely effective way to mitigate the worst of the crisis. So I'm quite bullish on central bank digital currencies, and I hope that central banks in freedom-loving places like the US and Europe take the lead, because right now China is the leader in that regard.
Okay, Alex, we have time for we have 1 minute left. We have time for one question.
Sorry, that was a really long-winded answer.
No, that was fantastic. No, that was great. Thank you. We have a question about the pace of all this. So you've laid out this beautiful vision, all right, the golden 9. How fast is this going to happen? Is it going to be something that happens overnight? Is this going to be 10 years?
Well, I say the world's not something, the future's not something to be predicted, it's something to be achieved, which is a bit of a cop-out. So let me try and make some predictions. I would say that in some respects, it's happening a lot faster than we had expected. I would say that the rise of tokens as a way to fund new businesses and new ventures happened kind of out of the blue, and it's really changed, entrepreneurship and venture capital in some permanent, profound ways. I would say that the rise of central bank digital currencies as an actual credible project has happened a lot faster. We would have thought originally that would be the last thing to happen. Governments are usually the slowest to act when it comes to new technology. However, in other respects, I would say that the attitude and culture inside a lot of large commercial banks, so private, non-government banks, is very conservative still, and is not as willing to embrace change. And there are exceptions to that. Goldman Sachs, JP Morgan, Fidelity, not a bank, but a very large financial institution, are real pioneers in this regard. But I'd say overall that the pace has been slower in those firms that I would have hoped. But when it comes to the predicting the future, people generally tend to overestimate the impact of a technology in the short term and underestimate the impact in the long term. So we wave our arms and say blockchain's going to do this, that, and the other thing. And maybe it didn't on the timeline that we expected. Maybe the ICO boom didn't bring about decentralized organizations the way people hoped it would. But in the long run, the impact of this is going to be more profound than we can imagine, I think. And it's going to have a huge, huge impact on every business institution and every person in the world. So buckle up.
I love that's what we all say as information systems professors, right? We overestimate the pace of change in the short term and underestimate it in the long term. Alex, I'll see you at the BRI conference.
I can't wait.
Thank you for joining us today, and we'll be in touch. And for our audience, now is the time where you can enter the secret word if you were listening at the beginning in our app, and we'll be back in about a minute with our next set of speakers. Thank you.
Thank you.